Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. Today, we talk about a Government of India undertaking, a Navratna company. I'm talking about Bharat Electronics Ltd, a legacy of excellence which was established in 1954. Initially, it was started as a manufacturer of communication equipments, and today, BEL has grown into a powerhouse of advanced electronics serving both defense and civilian sectors. We are talking about BEL, Bharat Electronics Limited, not BHEL, Bharat Heavy Electricals Limited. No, today our focus is on Bharat Electronics Limited. Both of them are Government of India undertakings, but BEL is the backbone of the Indian's defense sector. Now it makes cutting edge radars, electronic warfare systems, avionics, weapon systems for Army, Navy, and the Air Force. Its products include everything from missile systems to battlefield surveillance radars that helps to keep our country safe. The company not only helps to keep our borders safe, but it touches our everyday lives as well. Now EVMs, which the adult population in the country uses to vote during state as well as national elections, are manufactured and designed by BEL. It manufactured 30,000 ventilators for ICU purposes in record time during the COVID crisis. It also manufactures solar panel systems, which promote clean energy solutions for homes as well as industries. It serves customer outside India as well. It exports its products to USA, France, Israel, Germany, and many more nations. Now it supplies advanced components such as radar systems, communication equipments worldwide, making it a significant player in the global defense sector. The company heavily focuses on research and development. Nearly 7% of its revenue is annually invested in R&D. It has filed nearly 1,200 intellectual property right claims, focusing on emerging sectors like AI, 5G, Internet of Things, robotics, and many more. The company is also getting future ready. Now it is expanding into areas like smart city, cybersecurity, e-governance solutions, and space electronics. With ongoing diversification efforts, it aims to increase its defense revenue share by 30% by financial year 2030. The government has reignited capital expenditure after the general elections last year, and BEL has been at the center of this revival, with orders pouring in every day. This defense giant is riding high on India's push for domestic manufacturing in its defense sector. Also, European Union, with its renewed focus on defense spending and its push for a bilateral trade agreement with India, possesses a major advantage for companies like BEL and other companies in the defense sector. BEL's growth trajectory looks unstoppable. But is it a worthwhile investment? Well, that is what we are going to check in this video. Initially, it started in Bangalore. Today, it has 9 manufacturing units and 29 SBUs, strategic business units. This cements its position as a Navratna and a key player in the Indian defense sector. India's defense sector is booming. It is expected to grow at a CAGR of 20% from financial year 2024 till 2029. With focus of Make in India and rising geopolitical tensions, the focus on indigenous production of the defense equipments has been not so strong before this. Checking the quarterly results of BEL for the December 2024 quarter, well, sales gradually rebounded from a high of nearly 8,500 crores in March 2024 to a low of 4,244 crores for the June quarter. Like one can understand because elections in India, the results were out in June, right? The sales gradually increased in September, and in December the sales were rebounded to 5777 crores. Expenses for December quarter increased from the September quarter to 4,101 crores due to higher sales execution. Operating profit also higher due to better revenues for that quarter compared to the previous quarter, right? Operating profit margins uh, were in the range of 27 to 30%. For December it was recorded at 29, lowest being 22 in June, which shows operational efficiency of the company, right? Profit after tax, the net profit figures for September and December quarter were a recovery from 1093 crores in September to 1312 crores in December quarter. Yes, so the profit was quite weak for the June quarter, but then it recovered, bounced back for the December quarter. Earnings per share for the December quarter stood at 1.79, a gradual recovery again as government spending started to come in. Looking at the profit and loss figures now for March 2024, the sales were recorded at 20,200. For the trailing 12 months period, the sales were recorded at 23,183. Now, this reflects a robust growth in revenue figures. Expenses also rose to 16,872, indicating higher operating cost, but again because of increased order flow in the company. Profit after tax for March 2024 was recorded at 3,985 crores, and the trailing 12 months recorded a profit of nearly 4,992, so nearly 5,000 crores. So that reflects a healthy bottom line of the company. Earnings per share improved to 6.82. Dividend payout for March 2024 was a healthy 40%. Looking at the fundamentals of the company, the market cap of the company is 2 lakh 1,000, showcasing its significant size and market presence. Earnings per share, which is basically profitability per share, stands at 5.54. PE ratio stands at 40.26, which is higher than the industry average of 37.14. So the stock is a little overvalued. Than its peers, right? Book value per share stands at 24.16. So book value is basically assets after all liabilities are paid. So how much asset per share remain is 24.16. PB ratio, price to book value, what is the price people are ready to pay for the book value? That is assets minus liabilities again. So for that book value, what is the price people are ready to pay? The price is 12.30, which indicates that a stock is significantly trading above its book value, which could signal growth expectations and overvaluation. Return on equity stands at 26.39. It reflects the efficient use of shareholders' capital to generate profits. Dividend yield is a modest 1.1%. The debt to equity ratio on a long term basis is zero, so the company is practically debt free. Let us compare BEL with its competitors. Now, some of the competitors in that space for BEL are Data Patterns, Apollo Microsystems, DCX Systems. These are like the first four companies that I have taken. Now, if you compare the market price per share of BEL, it stands at nearly 275 levels. Data Patterns has fallen drastically and today is around 1600 levels. Apollo Micro Systems is trading around 115 levels, and DCX Systems is trading around 233 levels. If you check the price to earning ratio, BEL is standing at 40.61, which is moderately high valuation. Data Pattern is 49.75. Apollo Microsystems is 63.20, which is the highest valuation increase, like indicating potential overvaluation in the stock. And DCX is at 49.40. So of all the three, if you check the PE ratio of BEL, though it is higher than the industry standards, industry median average, BEL has the lowest of the PE ratios when compared to its competitors. If you check the market capitalization, BEL stands at a huge 2 lakh 1000 crores, Data Patterns at 8,800, Apollo Microsystems at nearly 3,500, and DCX at nearly 2,500 crores. Now, if you check all this in comparison to other players in the sector, BEL is a whale, right? And all others look like small fishes. So, comparison is a little skewed in favor of BEL because of its huge size and scale of operations in comparison to other players in the same industry. What do analysts say about the stock? Well, many analysts are bullish. Jeffries has set a target of 325 per share, citing the strong order inflow as the key growth driver. Motilal Oswal recommends a target price of 360 based on robust earnings, visibility, and margin expansion potential. So, many analysts have recommended a buy for BEL. Why? Because of the increased inflow of orders. Just search on the internet with the term BEL and Google it for news, and you will see the number of orders and the size of the orders that is being given to BEL by the government on a daily basis. The order size is just ballooning. Now, winds are flowing in favor of BEL with increased government support, increased defense budget, and policies favoring domestic procurement has boosted BEL's prospects. Right, BEL is also diversifying into non-defense sector like smart cities, cyber security. The segment is expected to contribute significantly in the upcoming years to BEL's revenues. Uh, like with heavy investment in R&D, BEL is leading innovation drives in AI as well as robotics and advanced radar technologies. But there are challenges which cannot be ignored. Heavy reliance on government contracts makes BEL vulnerable to budget cuts and policy changes. Also, supply chain disruptions could delay project execution and impact the margin for BEL. Now, looking ahead, BEL is targeting a revenue growth of nearly 15 to 17% annually while increasing its non-defense revenue share by up to 30%. Also, there are some major upcoming orders like Quick Reaction Surface to Missile, which is a 25,000 crore rupees order, and a medium range surface to air missile, which is a 15,000 crore rupees order, which will further bolster the order book of BEL. To summarize, BEL has strong financial health. It is a leader in defense electronics. Also, it has a robust order book with long-term growth visibility. Now, on the flip side, it has high valuations compared to its peers. Also, its heavy dependence on government spending can prove a bit risky if the government policies change and there are budget cuts. Please let me know your thoughts about this Navratna company and whether you think it is a good investment for long term purposes. Please comment below the video about what you think of the company and how you thought this video was. Also, any other company that you would like me to analyze and put a video on, please write in the comments section and I will do so. As always, investment in equities comes with its own share of risk. Please take advice from a financial advisor to align your investment decisions with your financial goals and do your own research. If you have liked this video, please like, share, and subscribe to my channel for more such informative content. Until next time, stay safe and goodbye.